Hello, welcome to the European Open briefing for Tuesday, November the 8th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So all eyes today are, of course, on the US elections, where it's looking like a very tight race between Hillary Clinton and Donald Trump. Yesterday, we saw that relief rally, and which came after the FBI cleared Hillary Clinton of any criminal wrongdoing following the discovery of some new emails that they hadn't investigated before, and we saw a big rally in risk assets. Today the markets, we're seeing they're cautiously optimistic that Hillary Clinton will win. In other news this morning, we had some Chinese trade data and as well as some Australian business survey data, which we're going to take a look at shortly. So let's start with the US elections, of course. And we can see here in the chart that big jump in US equities. Both the S&P 500 and the Dow Jones Industrial Average, they closed up over 2% yesterday. There was a big relief in financial markets from the FBI's conclusion that Hillary Clinton hasn't done anything wrong in terms of the content she used in her emails, in a private email server, and this boosted the chances that she may win the elections. She's currently 4% ahead of Donald Trump in the polls, but a different poll which is calculated based on the likely number of votes she will get in the electoral college system. Her odds are currently 90%, so there is a quiet optimism that she will win. Of course, following what happened with the Brexit, financial markets are also ready that there could be some potential upset. And then just to inform you that we will have the first exit polls out around 22 hours GMT, and then we may know the outcome by 4 a.m. GMT on Wednesday at the earliest, assuming, of course, one of the candidates has a clear lead. If not, then it may take longer to know the outcome. If you look at the dollar yen this morning, the dollar is holding comfortably above 104 yen. It's currently around 104.40 yen. We did have some comments from Japan's finance minister Taro Aso, who said that Japan may intervene in the currency markets if the election outcome leads to spikes in the dollar yen, and that presumably means if the dollar, we see a sudden drop in the dollar if, say, for example, Donald Trump was to win. But overall, the dollar is holding fairly strong. This morning, the dollar index is currently near 1-week highs. And now let's have a look at the Chinese data, because it was rather disappointing again. We saw exports decline by 7.3% year-on-year in October. That's worse than expectations of 6% drop, but it's better than the previous month's 10% annual drop. Imports also didn't do as well as expected, but they were slightly better than the previous month. The yuan is today at a fresh 1.5-week low. It hit a low of 6.7809 per dollar. We're seeing the Chinese exports struggling against lackluster overseas demand, but also worryingly, imports of commodities, which had been doing well in previous months, they fell back in October. So commodities such as iron ore, copper, crude oil, and coal as well, they all declined in October. So there could be a sign that a reversal of the recent rebound. And that also hit the Australian dollar, because as we know, Australia is a major exporter of commodities such as iron ore to China. But also weighing on the Aussie today were the business survey from the NAB. The business conditions index fell from 8 to 6 in October, and also the business confidence index also deteriorated from 6 to 4. The Australian dollar had reached a 2.5-week high yesterday of 0.7729 after following the risk rally yesterday, but it's currently around 0.77 versus the US dollar on the back of that disappointing data both from China and Australia. Now if we take a quick look at what's happening with the euro today, it's actually firm slightly. just ahead of the European Open. Yesterday it touched a 1-week low. I think that's more likely to be a technical correction because we had some disappointing German data. German industrial production was down 1.8% in September versus expectations it would be down by just 0.5%. Exports were slightly above forecasts, but we also had disappointing industrial orders out yesterday from Germany. So the overall German data seems to be on the weaker side in September, but of course the euro is more likely in recent days led by what's happening with the US dollar. Now before we go, let's have a quick look at today's calendar. We can see there we had the German data and the NAB business survey out of Australia. We had some retail sales out of the UK from the British Retail Consortium, which saw a strong rebound in October. Although the pound this morning, it has rebounded, it's back above $1.24, so that data may have boosted a little bit. Coming up later, the pound will likely come in focus again because we've got UK industrial output and manufacturing output as well. Out of Canada, we're going to see building permits and housing starts, but it's going to be fairly quiet in the US session given the elections. We only have the JOLTS job openings, but of course all eyes will be on that presidential election. We could see some volatility ahead depending on the outcome, but of course if Hillary Clinton does win, we're likely to see an extension of the current rally. That's it from me. Thank you very much for watching and have a great day.